The next decade or two is going to be far harder and a much sterner test of CEO capability than anything we saw over the last 30 years.
What if everything you know about running a company is outdated? In this episode, I sit down with the legendary management thinker Gary Hamel to explore why most leadership models are failing and what it actually takes to build an organization that thrives in chaotic, post-bureaucratic world. So if you think you're ready for real transformation, well, listen in.
We're still running with organizations where we have those top-down structures. We treat people on the front lines as kind of doers rather than thinkers. It's completely out of date. But for most leaders, Andrea, that is the only organizational model you have ever seen. To reach a point where you cannot solve the new problems with the old principles. How do I build an organization that has the capability to autonomously reinvent itself in the absence of crisis? Could you run an organization, let's say, with 10,000 employees with no managers at all? Most leaders say, I would have no idea how to do that. Well, that's how Birdzorg, the largest home health company in the Netherlands, runs. No managers at all.
What could be the best attribute of modern leader to allow that potential disruption in business models to change?
I think there are four things that have to come together to kind of make this transformation.
Hi, everyone, and welcome back to a new episode of The World Class Leader. So I'm thrilled today to have with me Gary Hamel. Gary is one of the world's most influential iconoclastic business thinkers. He has worked with leading companies across the globe and is a dynamic and sought-after management speaker. Gary has been on the faculty of the London Business School for more than 30 years and is the director of the Management Lab. Gary has written 20 articles for the Harvard Business Review and is the most reprinted author in the review's history. His landmark books have been translated into more than 25 languages, and his most recent bestsellers are Humanocracy and The Future of Management. In these volumes, Gary presents an impassioned play for inventing management and lays out a practical blueprint for building organizations that are fit for the future. So, Gary, thank you so much for being on the show today.
My pleasure entirely, Andrea.
Super excited to have this conversation. So we have on the show, not always and not so often, but, professors of, high and very important, schools all over the world. And so we have the academic view, but we also in our podcast, we have a lot of business leaders, so CEOs, people. So I think given your experience, and we were just chatting before, hitting recording, given your experience with a lot of CEOs, I think it would be a fantastic way to bridge, if you like, the gap between the academic world and the business world, and which I think is the challenge that we have today in our conversation. Gary, let me just start with a very simple question. I know it's not a simple answer, but a simple question. So what does it mean to be a CEO in 2025, from your angle, from your perspective?
Super good question, Andrea. Let me start by saying what I think it isn't, and then I'll definitely say what I think it is.
Right.
I do not think it means being the decision maker in chief. I don't think it means being the strategist in chief. I don't think it means being the smartest person in the room. What I think it should mean is two things. One is somebody who builds new institutional capabilities, who leaves an organization behind that is more capable than the one they inherited. And to do that, you have to think of yourself as kind of an architect, an organizational architect, building the systems, the incentives, the structures, and so on that allow people to give their very best. So I would say that's kind of a number one, as an architect of institutional capabilities, looking forward, trying to understand what are the capabilities that will drive success over the long run, and ensuring that the institution has those capabilities. I think number two, I would go back more than 100 years to Mary Parker Follett, the great kind of management thinker in America, who said the primary work of any leader is to create more leaders. And I think that's true for the CEO as well, to create an organization where more people have the chance to lead, to step up, to make a difference, to be change makers. And that means not simply training people within the traditional hierarchy. It means creating many, many more opportunities for bottom-up leadership in the organization. So for me, those are the two things: somebody who creates more leaders and someone who's building the institutional capabilities that will drive long-term success. I do not think they're smart enough anymore to set strategy. I don't think they're smart enough to make the critical resource allocation decisions. I think those things have to use the wisdom of the crowd, the wisdom of many more people. Simply the complexity, the volatility in the environment today overwhelms the cognitive abilities of any small group of leaders at the top. And I think it's super dangerous when we start to believe that these people are somehow superhuman, because they're not. They are more likely to be the cause of institutional failure than institutional success in most cases. So I think you have to take a very kind of sober view of what leaders can and cannot do in this world, and the vehicles to which they can actually have an impact and have leverage. But it's not, this idea of the heroic leader fits a few organizations. Maybe it's true for SpaceX and Tesla. Maybe it was true for a while at Apple, but it's not true in most organizations.
Yeah. So look, we already, we are challenging already one of the myths about being a CEO. You just said, the superhero, the superhuman, those people that have all the answers. And it's clear from your experience, from my experience, that's not really even close to the truth. I mean, the CEOs are human beings with a lot of actually flaws and challenges to dealing with all the challenges that are in front of them. Not necessarily they share openly, well, that's a different thing, but they're definitely dealing with that. And to unpack what you said, because look, we can really just talk about what you just shared for the next 40 minutes. To me, there are a couple of elements which are really interesting. So one is I like the way how you characterize the role of a CEO as architect or designer, or in my mind, also an orchestrator. So those people are able to make sure that all the dots are connected, they're operating and functioning effectively. So I think that's such a great way to say. And also because I truly believe, and I don't know what's your view, Gary, on this, is, and I posted on LinkedIn many times, and I know it gets a lot of engagement. When I say even the best people in the wrong systems, they don't operate at their best of their ability. So I think to me, it's more responsibility of creating the right system. And the system has a different connotation and colors, culture, processes, and etc. So to me, that is a great thing. The other thing I would like to share, I love the point about capability, because I know that for many CEOs, because I came across with some of them, they are so much into the short term and in financial, return and, pleasing their stakeholders, but they totally forget the development, the capabilities of the organization, as if it's something they can do at any given time. Is that something familiar to you? Do you see as some sort of, especially right now when the pressure is higher, the uncertainty is higher, so some CEOs, they might fall more into the short-term outcome rather than the bigger picture when it comes to developing people, think about talent capability, and they have a much more active role in that.
I think it's a good point, Andrea. I think the temptation to be perhaps overly operationally focused, overly short term, is a kind of a conspiracy of two things. Partly the external pressure and the pressure from shareholders. I want to come back to that, but also the inherent skill set of most CEOs. If you look at how most CEOs get the top job, let's take for a moment not the ones who've been hired from outside, but the ones who kind of emerge internally. Typically, it happens in one of two ways. Either they were CFO, that is the one very often
Yeah,
clear
very
route to get
typical.
to the top job. CFOs, by and large, do not have a very strong strategy muscle. They do not have a strong institutional building muscle. They just have a particular skill set, which kind of tends to take them into what I would call denominator management, where you manage headcount, you manage investment, and so on.
Sure.
Or they've gotten the CEO job by managing the largest legacy business and not screwing it up. So you manage the biggest division, the core business, and you push it forward a little bit, and then finally you have the top job. What you generally do not find in most organizations is the CEO is a builder. It's very rare to have a CEO who's actually had to build a new business, who's had, or even to fundamentally transform the organization. And by transform, I don't mean taking it through a cost-cutting, downsizing thing, but actually to kind of reinvent it in some fundamental way. Very seldom do you find. So most leaders have a particular skill set, which is focused more on operations, focused more on kind of denominator management. And then you have the pressure from outside. And the fact of the matter is, I think most investors, institutional investors, they're quite good at understanding the skills, the talents of a leadership team. So if you're a leader and you have no track record of building new things, if the organization has struggled with organic growth and your growth has been mostly through deal making or other things, if the way you've propped up the share price is primarily through share buybacks and so on, the investment community is not going to try to change you. They're going to say, all right, we understand what you're good at. Buy back the shares, give us dividends. We're going to take, the juice out of here. We're not going to trust you to make the lemonade, but we'll take the juice and we'll maybe redeploy those funds, let somebody else do it. So I think when CEOs feel they're under all this short-term pressure, they're right. But a lot of that
Yes.
comes from investors reading the capabilities of those leaders. So if you don't have a point of view about the future, if you don't have a strong track record of innovation and growth, then they're going to ask, like, whatever you're doing, milk out the business and give us the proceeds. So if you look at,
Interesting.
let's say, the New York Stock Exchange or the NASDAQ or any index around the world, what you'll find is that some organizations have a PE ratio of 20, 30, 40 to 1. Some is 8 to 1. And so you can never argue that investors are inherently short term. They are not. They were quite happy to ride for a long time with Amazon when it wasn't making any money for years and years and years. So they're not inherently short term. But if they don't see a leader as somebody who's capable of growing a business, transforming it, getting into new markets, then the pressure for kind of short term results is going to be super, super strong.
It's an interesting perspective, really, because I did not consider that before in the way that you describe. Meaning, my personal experience has been more like, by the way, I think it's such a valid point. It really depends where the CEO is coming from, right? Because if he has been hired by the investor, I'm sure that the CEO has been hired with those attributes, that the investor is looking for, right? Otherwise, why hiring that specific type of CEO? But if it's been promoted internally, and maybe they came later as an investors, clearly that what you describe, I think, is very valid. That's such a great point. To some extent, it's also a chicken and egg situation, right? Because if the company is going through, unfortunately, negative results, or requires some sort of turnaround, well, the role of CEO needs to change based on the context, the current situation. So it's quite useless thinking about the future and the development, the capability, when you have some emergencies like a burning platform, under your feet, which I think is a condition. I want to go, to expand on the point about pressure, because you said I want to come back on this, and I'm interested because most of the people I work with, and most of the people actually that come here, whether we design or not, at some point they start sharing, well, look, the level of pressure, and given the uncertainty that we're living right now, it's higher than before. Whilst there are other CEOs, they say, well, it's been always a pressure for me. But to me, the situation, the external context has changed, especially after COVID, with the supply chain issues, and also, the inflation, etc. Do you see a similar path? Meaning, do you see how the general pressure coming from the environment is increasing, and in a way or another is impacting the entire journey of SEO in terms of tenure, in terms of focus, in terms of skills? So what's your view about that?
I think it's a complicated picture. Let me try to unpack it a little bit. First of all, I think there's little doubt that we're living in a world where change is accelerating, where the future is less and less an extrapolation of the past, where every organization has to kind of win its success day by day, but where momentum and legacy and so on is perhaps less valuable than it was. You see this certainly, if you look at almost any industry and you look at who has created the new market value over the last decade or two, almost universally, it's newcomers in hospitality, financial services,
True.
transportation, wherever you look. It is not legacy companies. You look at the fact that it took Facebook 3 or 4 years to win 100 million customers, and it took Chat GPT 60 days. Knowledge is doubling about every 36 months. So for sure, it is a more volatile environment. You have huge mega trends like the disintegration between the US economy and China, middle class that's now stuck, and a huge amount of frustration that's emerging out of that and creating kind of populist forces around the world. So I think it is a more complicated, difficult environment than it's been in a very, very long time. Now, I want to come back. I think many organizations have found some ingenious, but perhaps not very good ways of insulating themselves from that. But I think
Right.
one of the biggest challenges, Andrea, for organizations over the next few years is going to be the following. Let me give a little historical data. And I'm going to talk for a moment about US firms, but it's just true to a greater or lesser extent across Europe and probably Japan as well. So what do you see over the last 30 years from like mid 90s up till now is US corporate profits have been growing at about 4.5% to 5% a year compounded. Very, very strong profit growth overall. If you go back to the previous 30 years, from the mid 60s to the mid 90s, that was 2.5%.
Right.
So something happened over this last 30 years, which is the working lifetime of almost every CEO, even older CEOs, right? We've been in an environment where you could grow profitability like this. And the economists who've unpacked this, it's quite interesting. Virtually all of that profitability growth has come from three things. Number one, historically low interest rates. So we had very, very low borrowing costs, close to
Yeah.
zero interest rates for a very long period of time. And of course, that takes a lot more money to the bottom line. Secondly, in the US, we had a significant decrease in effective tax rates if you look for the largest companies. So almost cut in half. So that was also a huge boon to shareholders and profitability. Number three, we had the economic integration with China, which allowed us to kind of do wage arbitrage on an epic scale where we could move most of the manufacturing offshore. We could move a lot of service jobs to India. And so, there's a reason that if you look over the last 30 years in the United States,
Right.
the median wage has only increased 8% in real terms over 30 years, while corporate profits have kind of been off the chart. Now, I believe all of those things are running out of steam. I think there's close to zero chance that the next 30 years are going to be as economically benign, as favorable as the last 30. And what's interesting is, I think a lot of CEOs are feeling quite comfortable and confident, but that growth that you see in profits has nothing to do with leadership. We don't have any better leaders today than we did 30 or 40 or 50 years ago. What we had was a different environment that made firms a lot more profitable. So, and then if you added another factor or two to that, virtually every industry has become more consolidated. So again, that's true in
Yeah.
airlines, banking, wherever you look, retailing, and so on. And again, we know from economists who study this that has allowed firms to raise prices. There's hundreds of billions of dollars every year that go from consumers to firms because they have much more pricing power today than they did 20 or 30 years ago. And we measure that by markups, by prices over cost of goods sold. And so you have consolidation, lower borrowing costs, lower tax rates, wage arbitrage. All of those things were reaching the point of diminishing returns. So I do believe that not only because of kind of volatility and change, but just because of broader economic factors, the next decade or two is going to be far harder and a much sterner test of CEO capability than anything we saw over the last 30 years. And by the way, a lot of companies have failed the test, even despite those favorable wins. If you look at the Global 1,000, less
Yes.
than half of them have grown their top line at rate of GDP growth. So you take these large, well-resourced companies filled with talent, and they can't even grow as fast as the economy. And you go like, what the hell? Like, what are you guys going to do when the environment really gets tough? So I think environment is going to be a lot tougher. I think we'll find out like which CEOs really are leaders and which are kind of administrators and stewards and so on. But it's going to be interesting to watch. And if you are a CEO, now's the time to start getting ready for that new reality and to understand, how do I build an organization that can change as fast as the world around it? Right? How do I build an organization that doesn't wait for a crisis to change? I read the websites of the consulting companies and they're filled like the words around transformation. But most transformation in these companies, these are catch-up programs almost always. Like we were behind digital or we're behind whatever, and now we're trying to catch up. Very few change programs are get-ahead programs. So I think that's there are others, but one of the fundamental questions for a CEO is how do I build an organization that has the capability to autonomously reinvent itself in the absence of crisis, that is completely, opportunity focused rather than crisis focused, that changes before it has to, that is relentlessly optimistic, that can capture more than its fair share of new advantages. And when you look at companies like Intel and IBM and P&G and so on, all of them fail that test. Like universally, they fail the test.
Yeah, look, again, so many things just shared in the last 5 minutes that again they require a lot of interesting discussion. So my takeaway from what you shared, one is despite despite the skills and the quality of leaders, there have been some external factors that have heavily impacted the ability for organizations to generate profit. And now they're facing in a new future. What you are essentially saying is the situation is evolving, and that conditions that were good conditions before, they might not be in place anymore. So that requires something else from current CEOs and their leaders to step up, because they have to change something, because just administrating the current situation is not going to generate the same result they generated before. So it has to be something coming from them, again, by design, by intention. So, and given what you just said, what I shared, what could be, by the way, you said also transformation, it's lip service, is a buzzword. Essentially is restructuring for many organizations. You're quite right. It's nothing like creating the future, disruptive ideas. Is restructuring what they have to deal with the cost. But they call it transformation, right? So let's go a little more into the leadership, right? Into the leadership skills, but also in terms of structure, organization. So how can CEOs should start thinking from a mindset, but also from an organizational standpoint, more in line with what you have shared in terms of to be more proactive in creating the conditions for their companies to adapt quickly to change, to become, something better, to deal with all the new challenges they're facing. Maybe something related to how they are structured. And so we might discuss a little bit about your book, Humanocracy, in terms of bureaucracy. But tell me, what are the right conditions for making that happen in them as a CEOs, but also in their organizations?
Again, a really good question, Andrea. Let me say also, though, I'm deeply sympathetic to the challenges faced by CEOs and by leaders. I don't want to be seen at all as kind of, I mean, they are part of a broader ecosystem, a broader system that rewards certain kinds of things. They came out of business schools, other things that trained them to think in certain ways. So
Yes.
this is definitely not like personal fault or personal failure or something like that. It is a much larger institutional kind of challenge, which, by the way, maybe we come back to. I think we may have to kind of even address this at a society level and not only one CEO at a time. But I think so. Let me give you just a little bit on my own personal journey, because I spent a lot of my early career helping companies build breakout strategies to do innovative things. We created billions upon billions of dollars of market wealth. I saw enormous successes. And yet, we do some amazing project, we get a new business built and so on, or we'd help the organization become more innovative. And then you'd come back 5 or 6 years later and it would be all gone. They kind of reverted to
Yeah.
type. You're like, well, what happened
Yes.
here? And and wherever I went around the world, and I've worked with organizations from every corner of the world in every industry, they were all suffering from the same disabilities, irrespective of culture, industry, leadership. Most of them found it kind of very difficult to change proactively. Change usually happened kind of crisis led. They weren't very good at game changing innovation. That usually came from the newcomers. They certainly weren't very good at inspiring the talent within the organizations. We know this, data from Gallup that says only 23% of employees are engaged around the world. And that's been that hasn't changed much in 30 or 40 years. So you see these systemic disabilities, what I might call the incompetence of the corporation, wherever you look. And when you see something that is ubiquitous in that way, it's not one company and it's certainly not one leader, right? They're all doing their very, very best. So
Yeah, it's a system.
it's something deeper. So you start to go, okay, what do all these companies have in common? Because they look so different and so on, but what do they all have in common? And what you ultimately discover, and I should have discovered it earlier, is they all basically have the same underlying management model. Every organization, you see these familiar traits. You have a formal hierarchy of authority. Power trickles down. Big leaders appoint little leaders. Senior executives are responsible for, creating strategy and allocating resources. You have ranks of middle managers who assign tasks and assess performance. You have powerful staff groups who enforce compliance. Employees compete for the scarce resource of promotion. And you just go like, okay, where did this model come from? Whether it's public sector, private sector, it's the same everywhere. And you go back and you go like, okay, well, this is industrial bureaucracy. And it was created in the late 19th century. And it was created for one overriding purpose, which is a very important purpose, which was to maximize compliance or control for the sake
Yeah.
of efficiency.
Yeah, totally.
So if you go back again and every technology, I mean, the management model you find in an organization, the systems, the structures, and so on, is a social technology. And every technology is a product of its time. And you go back and say, okay, when did we invent pay for performance? When did we invent the divisionalized organization? When did we invent capital budgeting? When did we invent annual planning? And all of this stuff, happened between about 1870 and 1910 and 1920. And at that time, thousands of employees were coming to work for the first time. We were building truly large institutions. And at the time, the average employee was illiterate, not just
Yeah.
illiterate. and they needed managers to tell them what to do. Administrative skills were very rare at that time. It was a little bit like being a data scientist or a geneticist today. And so business schools got created, Wharton in 1890 something, Harvard soon after. Business schools got created to train this new class of person, we called a manager. Information was very expensive to move. And the simplest way to do that, you build a hierarchy where 10 people report to a manager who consolidates their information and reports up. And in that environment, only the people at the top of the organization have the full picture. Everybody has a little keyhole. None of that is true anymore. None of that. And yet we're still running with this kind of, call it management 1.0 or bureaucracy, whatever term you like. We're still running with organizations where, we have those top-down structures. We treat people on the front lines as kind of doers rather than thinkers. It's completely out of date. And the cost of this, at one time, perhaps we could bear those costs. But in a world of relentless change and speed, and these costs are now becoming untenable. So you look at these large organizations, they're slow to change, they're highly conservative, they tend to be insular, they're disempowering, they have a lot of excess administrative costs inside of them. And we've kind of, we've done the arithmetic behind this. We know how expensive this problem is. And so, but for most leaders, Andrea, that is the only organizational model you have ever seen.
They know. Yeah.
So to ask well, could you run an organization, let's say with 10,000 employees with no managers at all? Most leaders say I would have no idea how to do that. Well, that's how Birdzorg, the largest home health company in the Netherlands, runs. 10,000 nurses, no managers at all. Or if you ask them, can you imagine taking a big company and dividing it into 4,000 micro enterprises where each one operates like a startup? And there are almost no middle managers. And these little micro enterprises contract together to tackle really big problems. And coordination happens through smart contracting and blockchain rather than layers of management. Their heads would explode. And yet that's the way hire in China is run now. Or if you're in banking and you say, could you imagine running a JP Morgan or Citi or Bank of America or Barclays or whatever it may be, or HSBC, could you imagine running it with only a third the levels and a third the number of administrators and cutting your compliance budget by 90%? They'd say that's impossible. And yet you look at the most consistently profitable bank in Europe, Handelsbanken, for 50 years, that's their reality, the most decentralized large bank probably in the world. So I think all of us in some ways, me included, we are all prisoners of our paradigms. We're all prisoners of, what we learn and the examples around us and what consultants tell us. And so if you've only ever seen an organization that fits that kind of 19th century template, it's hard to imagine something different. And so I'll just finish with this thought. I got quite curious thinking about, well, we have tried a lot of new things over the last 40, 50 years. I'm old enough to remember the quality movement, Six Sigma, Lean. More recently, we've had agile teams, mindfulness training, psychological safety. Every year there's something. And yet our organizations, literally, and we have the data on this, are no more capable than they were 30 or 40 years ago. And what you start to understand is we have been kind of fiddling at the margins, right? We've been taking that old top-down, bureaucratic, disempowering structure, and we keep adding little things onto it without going back to first principles. So it's a little bit like putting a tutu on a dog and you hope it's going to become a ballerina. And and it won't, because a dog does not have, biped DNA. It has quadruped DNA. So I think we're at this point in business history where if we want to build more capable organizations, we have to go back to first principles. Because you reach a point in any field of human endeavor, it's true in science, it's true in medicine and so on, it's true in politics, but you reach a point where you cannot solve the new problems with the old principles. So you cannot build constitutional democracy if you start with the divine right of kings. You cannot understand the subatomic world if you start with Newtonian physics. And I think we're at a point now where we cannot build truly better, more capable institutions if we start with 8, 9, 10 layer hierarchical organizations. I mean, it's just literally nobody's ever done it. Nobody's ever going to do it. You got to start in a different place. And so I think that's, and the good news is there are enough examples so we know there are alternatives. It's not like we're asking people to do something impossible, but it's a pretty difficult thing to ask, if you think it's difficult for a company to reinvent its business model, it's really difficult to reinvent its management model.
Totally agree. And just building on your point, I think one indication of what you just shared, in terms of layers and layers built based on previous model they worked for a number of years. So, many leaders are so really uncomfortable to change that because they don't know it, as you said, they're not familiar. And also there is such a huge risk on their personal reputation, etc. So that's totally understandable, especially in the context of pressure, etc. But to me, the biggest indication what you said, it really exists, and it's a way to really measure how the element of layers and bureaucracy is really strong or not in organization in looking at the proportion between people working in the office and people working in the front line. Every single time I saw, it's staggering to see how many organizations that are still operating like 90% to 10%, which seems incredibly surprising, but that's the reality of the operating. And that's to me is an indication how they have created jobs, for people they're not necessarily bringing value directly to the customer, which is supposed to be the number one thing. So to me, that is interesting because that's an indication, at least in my personal experience. And what you just described is so much familiar in my work. I have clients, when you work as a consultant, of course, you ended up working with companies that are already in that sort of structure, and you try to do your best and help them inside of the current paradigm. But I totally see how, by the way, I can see how leaders, they are so interesting to change potentially their model. I mean, it's not surprising, right? That so many leaders, they tend to go with the leadership team. They tend to go to California for a week and try to learn as much as possible from the Amazon, the Google of the world. And see, and they're coming back and they're so excited that, yeah, that's fantastic. We can do this, we can do that. But the reality is they really struggle to implement any of those models inside of an existing structure, old model that now it becomes the norm. So it's so difficult to make that change. I think it requires a completely different leadership. So to this point, Gary, I know it's probably $1 million question, but what could be the best attribute of a modern leader to allow that potential disruption in organizational models, business models to change? I mean, it's just a matter of being courageous, be bold, or there is something else a leader should be or should become in order to drive that sort of change? Because I think what you're saying is valid, but someone needs to start, right? Someone needs to, and I think there are some nice examples. I mean, looking at Jason Hang in Nvidia, there's something there that could be used and duplicated, give it incredible success of the company. But what are the attributes a leader should really?
I think courage is definitely a part of it, but I think there are four things that have to come together to kind of make this transformation. And by the way, I think just, if you look back, every organization over the last 30 years had to get really serious about digital, right? So digital transformation became this big thing. Now, virtually all incumbents were slow and behind. Like it's almost impossible to find an incumbent organization who was ahead, but they all knew this was going to be hard and we were going to have to do it. I think over the next decade or two, similarly, in the same way that companies, if you go back even further, they re-engineered supply chains in the 90s. That's when that work began. 15, 20 years later, they began like digital transformation. I think over the next 10 years, we're going to have to reinvent our management models. And it's going to be equally hard, and you're going to have to be systemic about it and thoughtful about it. But companies have done other hard things. It's not. So I think there are four things that are critical. I can state quite quickly. Number one, you have to have the motivation to do this. You have to believe there's really not an alternative, that your organization has to be fundamentally more capable in this new world. And part of that motivation comes from understanding the cost of the old model. So, typically leaders pay attention to things that they can measure. And what we mostly haven't measured is the cost of that old model. Now, we've tried to do that. We created something called the Bureaucracy Mass Index, BMI. Thousands of companies around the world have used this. And you start to get a handle on how much this is really costing, both in terms of things that might show up on the P&L, but things that kind of do, but indirectly, like if you're conservative and you're not experimenting and people are afraid to speak up and dissent. So number one, I think you have to start measuring that. In the same way that today companies measure environmental impact, you have to measure, like, how much bureaucracy do we have? Is it growing or not? And then every leader at every level has to be responsible and accountable for changing that. So that's number one. You need the motivation to do it. I think number two, you need models. I mean, I wish that wasn't true, but, and I'm sure you have this experience, Andrea, yourself. When you ask a CEO to do something new, the first question they ask is, who's already done it? And I go like, well, that's a good question because like we want to do something that's new and not like just repetitive. There's no advantage in that. But, a lot of leaders have a little bit of, I would call it ADD, a little bit of ambition deficit disorder. And as long as you can give them a lot of case studies and prove that somebody's done it, they're with you. But the moment you say, no, you may actually have to lead here. We may have to do something new. It's like, but you do, so you have to have the motivation, but you also have to some models, and we try to lay a lot of those out in our book. The second edition is going to have some amazing news stories like Roche doing this in a huge global pharma company. So you have to have some confidence that this is possible and there is another alternative, right? Thirdly, there are mindset changes, principally the one we were talking to at the beginning. You have to shift your perspective from, I need to be there on every decision, weighing in, being seen to be the CEO, to no, I have to step back and recognize my real value added is going to come from building institutional capability. And that's a mindset shift. You got to get around that. You also have to understand how the kind of bureaucratic mindset hampers you. So there's some like deep mindset work that has to take place here and get yourself, in with the right perspectives to do this kind of work, and recognize that you do have to go back to first principles, that the principles of standardization, specialization, formalization, stratification, all these things that we baked into our organizations may not be the principles that are going to be most important over the next decade. So there's some mindset work. It's not particularly that hard, but you got to kind of go through that. And then I think the last thing is migration. So how do I go from here to there when the change is quite radical? And I think, what I tell organizations is we do not need another top-down change program. This is not about going out like, here's our organization today. Let's put some smart people together, get some consultants. Let's script the alternative in great detail, and then let's like roll it out. That simply will not work because that new model is not clear enough. It is not like doing an SAP implementation or, let's put everything up in the cloud. And particularly any organization, you want to invent a management model that's unique to you, right? That's not like some off the shelf, whatever. So that means that the kind of the journey from wherever we are to wherever we need to be is going to take place through a lot of experimentation, a lot of small experiments. And we can come back to this if you like, but we do understand today the principles of rapid prototyping and experimentation, but we seldom apply that to management. So if you look at how we hire, how we compensate, how we allocate resources, how we plan, in every one of those areas, I need dozens of experiments going on across the organization, not blowing up what's there, not creating operational chaos, not taking financial risk, but look at every unit, every team. Here's a place where we can experiment and see if there's a better way. And we do it within risk parameters and so on. So, if you look at any complex system, life itself is a good example. Life advances through experimentation. Some things work and become part of the genome. Some things don't, and they don't. And I think that's, so when we're helping organizations do this, and sometimes we use technology to do it where we can involve 10, 20, 30, 70,000 people at a time. But we're asking them, guys, if we want to build these new capabilities, if we want an organization that's daring, that is dynamic, that is inspiring and so on, what do you think we need to change? And then how would you test that in a really low cost, simple way? So I'm very sure that the pace at which any organization can move in this new direction, can build these new capabilities, is absolutely an arithmetic function of how many experiments it runs, like just testing and trying, and the things that work, you scale up. And, if you go back and you look at companies like Haier or Handelsbanken or these others that I would kind of hold up as kind of the post-bureaucratic vanguard, that's how all of them did it. They had a vision. They had a vision of moving from how do you maximize control for the sake of efficiency to maximizing contribution for the sake of impact. Fundamentally different endpoint. You still need control, but and then it's like, well, how would we do that? And year after year, they try things. Some things work, some things don't work. But it's that migration. And so maybe I underline it with this last little thought. I think that the top-down model of change is just broken. And every consulting company will tell you that. Like only 25% of change programs meet their objectives. So like, let's just be done with that. That's not going to work anymore. I think what instead you need is a method of change that is socially constructed. You need to go to the people on the front lines who are doing their best, who want to make an impact, and you have to ask them, what's standing in your way? Where do you feel disempowered? Where are you wasting time? What makes collaboration difficult across the organization? What are the stupid rules and the processes that are not adding any value as far as you can see? How do we change that? So I think the most effective change going forward is going to be socially constructed. And it's going to roll up, not down. And so the critical thing for a CEO is you have to, I'm not asking you don't have to take a risk. We're not going to blow anything up, but you have to have the humility in a way to go to your organization and say, guys, collectively, we need to build a much more capable organization. We don't really know how to do this. We're not going to do it from the top. We need all of your wisdom and all of your experience and all of your creativity to help us do this. So, like, are you on board? Are you willing to do that? And, CEOs are not used to doing that. They're used to disappearing somewhere, coming back with a plan, having some answers that may or may not work, that probably won't work on the front lines, that often are not the right answer. But they're used to being seen to, like, rather than architecting a process, they're seen as coming up with the answer. And I think that's maybe the wrong way around in this case.
Yeah, look, I love it. I love it the way how you describe it. And I mean, to some extent, it might look like an ideal world that doesn't exist right now, but I think it has to be the intention, it has to be an aspirational future for leaders to think in that way. And the only thing I would add, I have nothing to say. I think to me, it's a fantastic way to describe a best scenario, a possible better scenario for driving really change, meaningful change. I think is the point about what leaders they need to do to allow people to do what you just said, because there will be, again, by design is requested that the leaders they act differently. Humility, you mentioned humility, we mentioned about we discussed about courage, but also to me is creating a condition for people to speak up, to experiment and doing freely without fear of repercussions. So there needs to be created, in other words, a culture that allows what you're just saying really to happen. Otherwise, there will be, again, as unfortunately happened, lip service. You say something, but then the reality, as soon as you see a reaction or something that you don't like, you're going to go back to the old model, to the old way of doing. And you can actually use that as a bad example, because you might say, we tried to engage our entire population. It didn't work. Let's go back to the older system. So
There's a lot of subtlety and a lot of hard work in what I would say is kind of large scale collaborative innovation and change. It isn't just about, putting up a question and asking a bunch of people, like, what would you do differently? You have to take them through a process of diagnosis. Like, how do we get here? What's really going wrong? You have to expose them to some of the new principles we talk in the book. What would it mean to build an organization that is open, that is transparent, where everybody feels like an owner? It's about kind of taking the old principles and embedding better principles in our organizations. People have to understand what those are and see how they've worked in other organizations, right? Don't ask the ignorant for an informed opinion. So there's a lot of education that goes along with asking people, okay, what do we do differently?
of course.
One of the things that I think is super important, let me say this, most CEOs I know are super frustrated. They want a more vibrant, more innovative,
Yes,
change-ready
totally
organization.
agreed.
They are frustrated working down through layers of the organization where anything they try to do just like seems to go into quicksand. And, there's 100 people below them that have pocket vetoes that can kind of just stop things in their tracks. So one of the reasons we try to do this work by engaging a lot of people in the organization, we are trying to build a coalition for the future that has more influence than the coalition for the status quo.
Yeah, I like it.
And and so that means, opening up this conversation to thousands of people, finding who the real change leaders are, who may not be visible from the top, finding what the best ideas are. And when you have 100 or 1,000 people saying, this isn't working, we need something different, it's very difficult for one EVP to stand in the way and say, no, 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 like, I don't like that. I mean, so, you have to find the people in the organization who are ready to change and are eager to do it and empower them and enlist them in that way.
Exactly, but you need to empower them. Otherwise,
You need to
nothing's going
empower
to
them.
really change.
But it does start with courage, not so much the courage to change, because the kind of way we do this, it's not, we're not blowing anything up. But you have to have the courage to set a goal for the organization that is daring enough so it becomes visible to people that more of the same is not going to work.
Yes.
When Bill Anderson at Roche, he was CEO of first Genentech, which is a subsidiary of Roche, and then he was CEO of all of Roche Pharma globally. I think the second largest pharma company in the world. This now goes back, I don't know, maybe 8 or 9 years. But he said, we need to find a way of delivering 3 times more patient impact for half of the cost. because you could see that the pharmaceutical industry, medicine is bankrupting economies around the world. We need fundamental innovation here. And once you say that inside of an organization, people go like, oh crap, like we have just too much stuff we're spinning our wheels. It's not really creating patient value. We need to get a lot of this stuff out of the way. We need to be faster. So if you create that kind of aspiration, people will naturally say, okay, like we got to do something different. We're not going to get there
Yeah.
with more of the same. So I think that's where, and the problem with bureaucrats, I have to say, is that they are often very reluctant to articulate or commit to a goal where they don't already know how to get there, right? Where they can't see the whole path, right? A bureaucrat starts down a path only once somebody else has turned the lights on and already lit it, right? And already taken the machete and cleared it out. So when Bill Anderson said that at Roche, he didn't know how to do that. And they started with, the top team and then the top 2,000 go, guys, we don't know how to do it. Interestingly, at Roche, I'll give the last couple of little clues here. At Roche, the first year, the senior team spent 1 day a week. Imagine that. A day a week, the senior team together trying to understand how their role was going to need to change and how they needed to show up differently in the organization. And how many companies does a leadership team meet, once a month together in a way that's focused on themselves and not on some business issues? So they understood that the change had to start inside of them and that they had to debureaucratize themselves in the way they thought. And then they put together a bunch of design teams that cut across the whole organization, top to bottom, huge amount of consulting going on with every possible group, huge amount of input. Every part of the process is completely transparent across the organization. There are not going to be any surprises like, how the hell did we get here? So it was a very, very different kind of change process. They could have done it probably faster and with some technology and so on. But as a CEO, you do have to have the guts to say, like, it's time for us to move in a different direction. We need genuine transformation, and I need all the help I can get in doing this.
Yeah, and that's such a great final message for the people in the audience is if your goal, if your aspiration is not big enough, what you're gonna actually generate is just the same old, probably just an incremental improvement what you already have. So I think we have such a great need of visionaries, leaders that can really create that sort of aspirational vision that can really stretch organization to think differently. I think that is a fantastic way, as a final message to complete, this amazing conversation. Gary, where people should go if they want to know more about you or your work?
Well, you can find me at garyhamel.com or email me at gary@garyhamel.com. I'm on X, Prof. Hamel, LinkedIn. Always happy to have a conversation, hear from people, answer questions. So yeah, if you have a question out of this, you can reach me and I'll do my best to answer it, to point you towards some good resources and help if I can.
Gary, thank you so much for being on the show with me today.
Pleasure. Thank you, Andrea.